Good morning. It's Jeffrey Cohen. It's January 11th, Friday. We got our down run. Top 10 or 20 down picks. These are stocks that our model ran last night that you should avoid. Stock number one, Lightwave Logic, LWLG. Expected return 15%. AADI, Adi Biosciences. Funware Incorporated, PHUN, Burcon Nutriscience Corp, BRCN, Regan Cell Bioscience Holdings, RGC, B Square Corp, BSQR, NRX Pharmaceuticals Inc., NRXP, Second Sight Medical Products, EYES. We know them. They're the ones that put the chip in your head. Who's going to do that? Just get a pair of glasses. Cortexim, CRTX, Ocugen, OCGN, those top 10 stocks. Jeff, what can you tell me? First thing I can tell you is they've got negative Chicago Quantum net scores. That means on a relative basis, their risk is greater than their expected returns. So let's take a look. How have they been performing? Well, overall, it's mixed. On average, they're trading at 86% of last year's average price. Variance, in some cases is pretty low. In some cases is very high. One of them pays a dividend, 3% dividend, RGC. So if you do short it, just know you got to pay back that dividend. Stock number 11, Anavis Bio, ANVS. ACY, Aerocentury Corp, restructuring out of bankruptcy. BY, and they just did a stock split, 5-to-1 stock split. I'm sorry, 1-to-5 stock split. Reverse split. BYSI, Beyond Spring. No, it was a regular stock split. Aerocentury, to increase the number of shares. Frequency Therapeutics, FREQ, RepX, Riley Exploration Permian. Minim Inc. That's new on our list. That's a new one. GRTX, Galera Therapeutics, also new. Cassava Sciences, it's been there forever, it seems like. PROG, Progenity, and GOED, 1847, Goedeker, and Eargo. So, top 21 stocks to avoid. Let's take another look. These expected returns are fairly low. Some are higher than others, so Riley Exploration is up because of its beta. Aerocentury seems to trade like a perfectly managed stock price. So that one has a very high expected return. And this is based on beta. What's interesting is now as you stretch down the volumes. So if you look at the average volume last year, these stocks on average are trading at 64% of last year's volume. But what's interesting is some of these stocks are way down in volume. Regan Cell is trading at 1% of last year's average volume. It's just not trading. Adi Bioscience is at 6%. So these are stocks that maybe have been left behind. Anavis Bio at 12%. You do have one interesting thing. Lightwave Logic Inc. It's trading at 5 times last year's average volume. It is the number one stock on the list. We call it the dog star. And so the stock drops when markets are dropping. So you now have our top 21 picks. So what else did we learn about the model or from the model yesterday? So the one thing we learned was that actual returns of the market are way down. Way down. And so the IWM, which is the Russell 2000, is down almost 5% this year. Not year to date, but over the last 253 trading days. We haven't seen that in a while. S&P 500 is up 18%. Now you might say, hey, that's great, except that earlier this year that number was up like 40%. So you've seen a flattening, and then you've seen a dropping. If I pull up a chart for the S&P, that might help you to see what I'm talking about. Just look at the SPY. It's not a big deal, but it's just something you ought to know, right? So If you invested in the spider, you made money all year last year, up until about September 3rd. Then you got nervous because in September we had a little bit of a correction. And then it went back up again in November. Another couple of corrections there. And then, wow, end of the year, it actually ended really nice and high. And now it's dropped. So the challenge you have is you don't know. Is it just a small correction like we had in October, December, and May, and March? Or is this something bigger? So if we look at the volume, I'm not seeing a capitulation here. I'm not seeing tons of volume. So let's take a look. I want to try something here. I want to take a look at the 1 week, 5 years, and say what we've seen is we've seen a lot of little corrections happen. And to be honest, right, I've got money in the S&P 500. I've got more money in the S&P 500 than I do in all my individual stocks that I play with. And sure, am I sweating? Yeah, it's killing me. But I don't know that it's over. I don't see the volume confirmation here. I just don't know. I don't know. I saw volume confirmation here in February of 2020 and in March 2020. Absolutely I did when the COVID hit. I also saw it in 2018. I don't really see it now. So what I would tell you is maybe don't sweat it. But if you're trading just for a couple of days, our model looks out about 20 trading days. If I take the same chart and show you what it looks like for the Russell 2000, I have a feeling you're going to see something different. So I like to use the ETFs and not the exchanges themselves. So this is a 1 week, 5-year chart for the Russell. So you see the Russell, as you might normally expect, 2018 into September. It's doing fine. And then it just took a crap sandwich here. It dropped 40 points, 30 points, about 20%. But, and it had volume confirmation here. It was exhausted on December 16 of 2018. And then it came back and it rode this flat support line, peaked up, dropped. Rode its way up post-pandemic. You could see that just the slaughter, right? And it's been flat. We've talked about this. Flat as a pancake. What are you going to do about flat market, right? The truth is there's nothing you really can do. These are small caps. There's no trend. These are small cap. This is Main Street. This is biotech. This is cannabis. This is risk. This is tech. This is Chicago quantum type companies, right? You're betting on innovation. And so now it came down. What is interesting, though, is you had the biggest volume confirmation that week of November 28th when it dropped. It really hit an all-time high, I believe. And now it's come down quite a bit. And so from 240 to 200, that's 40, that's almost 20% correction. That's dangerous. But what's interesting is you're going back a year. You're kind of, it's rough. This whole period right here has been a rough, flat period. And so if you're playing the small caps, if you're a retail investor and you want a $1, $2 stock, 50-cent stock, you're playing in dangerous waters right here. So I'm going to come back to the list again, in case you guys are joining a little bit late. Top 10 stocks to avoid or to short. And we can go back and check to see if you made money. This is pre-market. I'm giving you this because we are actually, we make money by giving you our data, by giving you our runs before the market opens the next day. We crunch all the stocks. So let me tell you about these stocks. They have a minimum market capitalization, and I'm leaving them on the screen so you can take a screenshot there, and you can see if I'm wrong, see if I'm right. I think you're going to find that we're right here. We got some good dogs here. And we look at all the stocks and we say, all right, negative net income, market cap over $50 million, has to have traded continuously all year. Senator Palpatine has to agree with me that these are dogs. Okay, Senator Palpatine has nothing to do with our model, but that's okay. That was a Christmas gift. And the stocks have to have more risk than relative return. It's interesting when you see the dividends, right? It's interesting that some of these stocks have tremendous variance. Anytime you see a variance in our model of over 1, it means that relative to the stock price, this because we normalize for stock price so that you can compare these across companies. And you got 4 of these stocks, 5 of these stocks in the top list here that are just absolute risky, crazy stocks. Crazy stocks. Just moving like I can't even tell you what to say. Stay away is what I would say. So let's freeze the columns. Let's slide on over and see what stocks are those. FREQ, ANVS, CRTX, NRXP, AADI have the highest variance. By the way, LWLG with a 6.93 is also very high, but maybe not as high as the others. So some of these are higher, right? Some of these are lower, right? 19%. This NRXP is down 81% versus the average of last year. CRTX is down 79% versus last year. So you'd say, Jeff, it's a steal, it's a bargain, I love that stock. It's down 80%. How much lower can it go? It can go 100% lower. I'm sorry. Stay away. LWLG, AADI, FUN, BRCN, RGC, B Square, NRXP, ICE, Cortex, OCGN, ANVS, ACY, BYSI, FREQ, REPX, MINM, GRTX, Sava, Prague, GoEd, and EAR. If the market falls today, these will fall faster than the S&P 500. You heard it here. What else did we learn? We learned that the market of small caps, and a lot of those sound like small caps to me, small caps are down almost 5% for the year. This is not a good time, okay? So, last but not least, little plug for friends of ours, clients of ours. Black Bag Media Collective, Friday, January 21st. That's today, 1 to 3 p.m. Pacific time. Meet the Possibilion, a cyber alien virtual oracle that uses quantum computing and machine learning. This uses the D-Wave quantum annealing system. It is a purely quantum algorithm and a quantum system that helps you to have Oculus VR virtual reality in Neos, the metaverse. And the worlds that you see, the music that you hear, the experience that you have is driven by quantum computing. And it's being presented by Dr. Jeremy O'Turner. Hey, Jeremy, good luck today. And thanks so much for being a client. Appreciate it. All right, y'all take care now. Good luck in the market. And do avoid those stocks. Bye-bye.